Rising interest rates have yet to tame inflation with the current tight job market. According to many economists, this creates conditions that are ripe for a recession. And one of the loudest voices to join the chorus is former Treasury Secretary Larry Summers, who says that a recession within the next 2 years is the most likely thing. In an interview with Bloomberg, Summers criticized the Fed's focus on a soft landing for the economy. Instead, Summers offered a more pessimistic prediction. According to Summers, if you look at history, there never has been a moment when inflation was above 4% and unemployment below 5% when we did not have a recession within the next 2 years. He added that the odds of a recession-inducing hard landing are certainly better than half, and quite possibly 2/3 or more. I too think we are headed for a recession, as in my experience, the Fed has never been able to engineer a soft landing. And there's one thing about inflation. If you don't manage it, it can multiply like rabbits. So, what have I done? Well, I'm now sitting on lots of dry powder, and I'm willing to wait for my opportunity because it will come. And we're going to take a look at one chart here in this holiday weekend. And this is the 6-month daily chart on the spiders, the SPY. And the close on Thursday was 437.79. Now looking at the past, say, 3-4 days, you can see a bit of congestion here with the price. And that's an indication that the market is trying to slow down, trying to bottom base, and hopefully turn. You look at some other bottoms, such as this here, a lot more congestion. None here, but we have a bit of congestion at this point here, none here, but some here. So it's a hit and miss. It's not always correct, but in my opinion, based on the oscillators, which we'll take a look at here real quickly, I think the market is trying to slow down. Moving here into volume, volume is lower, not as low as I'd like it, but it's good enough. Into the MAC, you can see though that there's a bit of acceleration on the fast line, but I don't think it's too significantly negative. We're still above that zero line, both for the fast line in black and the slow line in red. But moving here into the histogram, you can see the perhaps start of a bottom and a basing. Things are slowing down here. And that's what we want to continue here into next week. And hopefully next week we'll get the bottom and basing, just as we did here as well as here. These aren't real good examples here nor here. So I think looking here at these, that's the best thing for you to look for a reference. Moving down into the price rate of change, also the same thing here, a little bit of sawtoothing. A lot more sawtoothing here, but this perhaps is a little bit more similar to the experience that we're having right now. But I do think that this sawtoothing will probably continue on into next week, hopefully moving mostly to the side. And if so, that is another indication that the market wants to slow down, bottom, and base. Here, relative strength index is at a 38.14, which is relatively weak, but still we're within striking distance of that midline or 50 line, and definitely we can see this move on up, some improvement going all the way back to January. Moving down into stochastics, you can see a little bit of a hitch right there, an attempt, not all that great, but looking at some of these other examples, they're not really all that different either. So it definitely is in the territory where it wants to bottom base and turn. So that's what we will be looking for into the coming week. And the same thing here with the Williams, a little bit of sawtoothing down here, back down to this negative 95.36 level, but I definitely believe that it's trying to gather some strength to a move on up. So we'll look toward that in the coming week. Back up here to the price chart. One last look at that. and hopefully we'll have a better week next week with improvement, and hopefully we can continue on our way up. At least that's the short or near term probability in my humble opinion. So happy holidays, and for today, that's ChewDog Charts. Thank you.